Hi, and welcome to another presentation brought to you by Credit Lifter. My name is Alex, and I'm the founder of the company. In this presentation, I will talk to you about what's going on as of April the 23rd with Federal Reserve, rates, banks, and small business lending. A few short words about me. If you don't know me already, I started my career in 2007 on Wall Street, where I worked for multiple banks and investment companies. I transferred that knowledge to the consumer side, where I now help you build your credit, fix your credit, and get the financing you're looking for. If you have any questions after this presentation, please feel free to reach out to our team at 888-696-5108. As you can see on the screen here, sometime in March, the Federal Reserve realized that they had a major problem with COVID-19, and they've enacted emergency rate cuts. When they did that, the rates dropped basically to zero. This is a rate for the monthly treasuries, which means that the banks are getting all their money practically for free at the moment from the Federal Reserve. As you can see from the second graph, the 10-year treasuries stand at 0.63. That means the entire yield curve, all the lending rates have moved down drastically. So you're probably asking the same question as everyone else. How does that affect me? The Federal Reserve is throwing a lot of money at the banks, and they're forcing the banks to keep lending. As of the other week, commercial and industrial loans registered the biggest week-over-week increase in 45 years. Unfortunately, most of the businesses that got the money were not the small businesses, but the large-sized corporate businesses, and the money ran out in just 2 weeks. The federal government knew that $350 billion would not last. So this would be the first tranche, and they're going to approve second and most likely another third tranche coming up in the next month or so. So as of right now, on April the 21st, the new tranche has come out, $320 billion. We expect that to run out quickly again. There's 30 million businesses in the United States, so that money is going to fly off the shelves very quickly. As you can tell by the headlines here, the Federal Reserve actions are working. The banks are lending at the fastest rate ever, and the big companies are taking advantage to draw down their credit lines. They're getting into a defensive position in case COVID-19 lasts longer than everyone expects. From our conversations with banks, what we have every single day, we know that they're well capitalized, and they're still lending to clients out there. What's important to understand is small businesses need to be in position. They need to have enough cash on hand to be able to outrun this COVID-19. Unfortunately, some clients are not preparing well enough. They're not preparing their credit, and they're not preparing their financing. We are advising our clients to prepare their businesses and build up some cash reserves just like the big companies are doing. We don't know how long this is going to last. So this is very important to have your credit ready to go, to have those equity lines of credit in case you're going to need those emergency funds. There are great programs out there that will give you up to about $150,000. It takes 3 to 4 weeks or so, and you can borrow that money under your personal or business credit. You pay interest only on the portion of money that you use. These are not term loans. No financials are required and no collateral is required. Now, I would like to go over the difference between small business term loan versus the line of credit, because they're really two different products designed for two different things. And unfortunately, a lot of consumers don't know the difference between the two. When you take out a small business loan, you typically need it for a large purchase. And those payments are broken down into pieces. Same payment every month. Now, the interest rates are typically lower on these kind of products, and loan terms are longer. These are fixed payments, just like your mortgage. The small business line of credit is going to be a little bit different product. It has a slightly higher interest rates, but it gives you a lot more flexibility. You only borrow whatever you want to borrow, and you can pay off whatever you want to pay off. There's no fixed monthly payment. There's only a minimum payment, just like your credit card. So the real difference is this acts more like your mortgage. This acts more like your credit cards. We are advising our business clients to prepare those lines of credit, to have their personal credit and business credit up to bank standards. Remember, these lines are not available for just anyone. The banks are not in the charity game, and they're going to look at your credit to be able to extend these lines to you. Again, I'm going to highlight the difference between a term loan and a line of credit here. Term loans are for equipment, real estate, vehicle, business acquisitions, and line of credits are more of a short-term loans, overhead costs during off-season, restocking inventory, payroll, and emergency expenses. These programs will extend about $25,000 to $150,000 to you. 0% usually introductory rates for up to 21 months. No collateral and no cash flow required. Now, you have to understand that the banks are increasing their standards, and your personal credit has to match. It has to be a 700 plus FICO, minimum 4 trade lines, minimum 1 installment, credit utilization of under 30%, no derogatories, and no more than 2-3 increase per bureau. If you have any issues with your credit, such as these, we can help with that. There's a way to artificially strengthen your credit, increase the credit age, add credit lines, and help build the overall strength. We are advising all of our small business clients to raise cash, to look at any programs that allow you to borrow at low interest rates. It's important to look at economic activity from 6 to 12 months out, and it looks like it's going to be down for the foreseeable future. Also, if you need additional flexibility, take a look at the CARES Act. It allows you to borrow against your 401ks, and there's ways to pull money out of your homes by doing cash out refinances. If you have additional questions about this presentation, please reach out to our team. We're here on standby helping businesses get through this together. Please keep your family safe and take care.